Hello and welcome back to Volatility 411. It's Monday, March 8th. I'm Kevin Davitt, part of SIBO's Options Institute. Now last week, the VIX Index moved in a wide range between 2245 and nearly 32. By week's end, the S&P 500 had rebounded, and the VIX Index ended the week down more than 3 handles at 2466. Today, the S&P 500 continues Friday's advance and is higher by nearly 1% as I sit here. The VIX Index is slightly lower after opening higher. Now, the average true range for S&P 500 futures over the past 2 weeks is 78 handles, or roughly 2% of spot. The market has been realizing significant volatility on the heels of Jerome Powell testimony, interest rates popping, the next stimulus bill progressing, and vaccination efforts continuing. Now, every year has its moments, but the past 52 weeks have been unusually life-altering. Nearly a year ago, the VIX Index was measuring in the 80s and the market was moving 5% on any given day. Now the VIX is in the mid-20s and 1.5% to 2% ranges are fairly standard. Here and now, the March VIX futures are trading 2460. The month 2 April futures are trading around 2670. So that spread is 210 wide after settling at 220 wide on Friday. So the front of the curve is relatively steep, the back is relatively high and flat. In VIX options, the March 25 straddle is worth about 410 mid-market. Those options will expire and cash settle on the 17th. Economic data is relatively light this week. Budget data Wednesday. For whatever it's worth, the federal deficit surpassed the 28 trillion mark last week. Weekly jobless data on Thursday and preliminary UMich confidence data on Friday. Now on March 8th, 2020, the VIX Index closed at 2445. Quite a year it's been. The path has been anything but linear. That's Volatility 411. Thank you for tuning in.